Yesterday morning, we learned the Bank of Canada decided to hold the interest rate at 5%. Good news for those of us with variable mortgages, variable rates. Speaking of this friend. Joining us to discuss is money expert Rabina Ahmed-Haq. Rabina, what went into the bank's decision yesterday to hold the rate steady at this point?
The Bank of Canada governor did make some comments as to why they made the decision to hold rates at 5%. They are happy with the slowdown in not just Canada's economy, but the global economy. Consumer spending has slowed, business activity has slowed. These are normally bad news stories, but in this case, that means the interest rate hikes that they have been doing for the last 18 months are working, and people are reining in, businesses included, their spending. They're still concerned about wage growth. Wage growth is still 4 to 5%. And if Canadians are being paid more, that means they can go out there and spend more, and that could stoke inflation. But that was part of the reason where they held rates. There's a lot of concern if they were to raise rates again, that it would make it impossible for many to afford their mortgages. So that must be on their minds as well.
So, Rabina, this decision to hold the rate steady, what does that mean? Are we closer to the target of 2% inflation? And fingers crossed, perhaps rate cuts, are they next?
So the Bank of Canada governor did say that they are laser focused on getting inflation back to 2%. That is their target. It always has been. We know that the latest inflation data that came in for December was higher than the November data. And so that does mean that there is still some work to do to get the number back to 2%. Economists and forecasters are saying that they do expect a rate cut in June of this year. And some really rosy forecasters saying we could see 3 rate cuts by the end of the year. The Bank of Canada governor yesterday in the press conference was repeatedly asked that question and said that it's too, actually the word he used was premature to talk about rate cuts yet, but he would have to say that. I don't think he'd want to pin himself down in a press conference saying I'm going to cut rates because people would be very angry if he didn't.
Before we let you go, we want to ask you about this, a massive data breach involving 26 billion records has been revealed. It includes X, LinkedIn, among others. How do you know if you've been impacted, and what's the best way to protect yourself and your online finances and data?
The biggest concern about this data leak is that it's not just passwords and logins, that it's actual sensitive information that they are saying if it got into the wrong hands could be, they could use it for other intent, taking out loans, copying your identity. So those are things that to be very concerned about. I think this is a good reminder that we should be changing our passwords regularly, not just when we're prompted to or when we're locked out because we can't remember what our last password was. And that especially for the sensitive stuff like banking, your email, things where you really do have a lot of information that if it was in the wrong hands could do a lot of damage. Make sure that password is unique and not like any other password that you have. That's one of the issues that most of us have, is that we think of one unique password and then we use it for everything. So that is that's bad practice. So really try to make sure that your passwords are different. I have started keeping a record of my passwords because I'm so frustrated because I can't remember them, but that may be something that you could do just to keep record of what passwords belong to which logins.
I know. I was about 15-20 minutes trying to remember my password coming back from the holiday break earlier this month. I'd stumped myself. I was like Winnie the Pooh. Think. All right, Rabina, thank you so much. Appreciate it this morning. Good to see you.